All right, guys, good morning, everybody. Friday, first week of trading in 2023 so far has been really good and volatile. Trading wise, the markets popped up because of the job numbers. Apparently, the job number, I don't know exactly what was it. I think there was a kind of a mixed
It
number,
was
like
strong.
it was a
The
strong, but there
jobs,
was
the
something,
job,
the
the
reason that
actual,
more.
it was the wage growth was weaker than expected. Jobs were
You,
stronger, but wage growth is weaker, and wage growth is probably more important. You don't want to see wage growth really starting to take off, and that's really what fuels inflation.
Oh, you're right. Yes, wage growth, especially that the American economy is mostly services, so the wage growth is really actually impacting the inflation number and inflation reading. So the job number was really good, which is bad because it means that the economy is still strong, but also wage growth was lower, which means that okay, so we're getting into that recession and price stability. So popped up, but sold off really at the day, and then run up again. And then ISM, Industrial Manufacturing Index, or something like that, came out, which was really really bad. Again, that means that the market, the economy has cooled down. I think manufacturing index is one of the leading indicators of the inflation. So when you really chill and cool down the economy, so that's good for the market. Means that the tightening can be a little bit slower. And, it's just the relationship that if the economy is too good, the inflation is high, then the rate's going higher and higher and higher. But anyway, so the market turned out to be really strong. One of the trades that I did was TQQ at S3. So the market, after this big drop that we had in the first 15 minutes, I took it long at 16.15. I was actually originally just hoping to get the bounce to previous day close. And from 16.15, Brian and I took it really nice together, and then really popped up to VWAP. I got out of the PWAP. On the pullback, I hold it. At 10 o'clock, you see the volume, the manufacturing index came in, and as soon as it popped up, we just continued scaling out. And then from 10:15, I was just holding it all the way up to 17, and I still have it there around 17. So it was a really really beautiful, this kind of a luck trade that you get right at the bottom of the move. So that's that's my trade. And then Tesla is very actually interesting. The trading on Tesla. Let me actually do some Tesla analysis. I took 3 trades on that. 2 of them lost and one of them very profitable trade. So how was it? So Tesla was gapping down against 7%, and at the open, first 2, 3, 4 minutes turned out to be above the VWAP. I didn't trade that. I want to stay away from trading it. It's a little bit too volatile. Then I went long for the opening range breakout, potentially like a 1 minute or 2 minute opening range breakout, but I just didn't like for 2 minutes. It really didn't do anything, so I got out of it completely. So that was my first trade that I got to stop that. And then suddenly, huge drop, lost the VWAP, and on a 5 minute chart, turned out to be a bearish engulfing pattern. This is called the bearish engulfing. So when the second candlestick 5 minute is much much bigger than the first bullish one, I kind of overlap the whole thing. So let me actually zoom in a little bit more here. So this is called a bearish engulfing. So that's why I went short. So it would be kind of a 5 minute opening range breakdown, but I went short heavy. We also see a huge beat. I posted on Twitter. But because I didn't have a really good entry on that, so I didn't partial properly, because I needed to, again, your first partial should be your first R. So that was my stop loss, and that was the first R that we got to get that. I didn't partial. I was hoping to get to break this one and go lower, but it's suddenly huge bounce back. Look at this, 1 candlestick, 2 candlestick that are really bullish on a 1 minute short. So that's why I got to stop out here. And then that squeeze came back up, turned out to be a bullish engulfing on a 5 minute chart. That's why I flipped my position long. So add here, and add here for the break of 105 and break of high of the day. So this one is actually interesting. So that's my second trade on it. This one was a loss. This one was not a really nice loss, very big, but this turn actually starts from here. So this one was the trade that I took, and I actually made most of my money on that. So how was it? On a 5 minute chart, let me actually go on a 5 minute chart, show it on a 5 minute chart to you. So this is a bearish engulfing. And now this turned out to be a very bullish engulfing. So this second one, this is really huge squeeze, and I knew this is going to be a shorter squeeze, and I just went long heavy on that. From 103, average is actually 103.63, and now it's going to go up to even to green. So let's show it to you. Oh, there you go. Yeah, so here from 103 went up all the way up to 107, 108, 109, and I think based on the analysis that Jared did, we might very well to go to 110, which is the previous day close. So we're hoping to get that. All right, so that was a really, really good trading day for me. So again, Tesla, 3 trades, 1 break even, 1 loss. So you get out of the short. If you get a squeeze, just get out of it. Flip the position if you think it's really volatile. So got out of it. The third trade on Tesla was really nice, and obviously TQQ was also a very, very nice trade. So Brian, how was your trade? I know you traded TQQ with me right at the bottom. It was actually your call, I think you mentioned that. So I traded right at the bottom here.
Well, the great thing about today was, as I mentioned in my watch list, there wasn't anything I was really overly interested in, but I, usually I go back to looking at the Qs or the SPY, just look at the indexes. So I did play it to the short side too. Once when we popped up and then started to drop, I got in when we kind of lost the VWAP on SQQ. So that was, so I traded SQQ all the way down, got out of it when we got down around previous day close, and then low of day, and then yeah, like you said, then we caught the bottom on that reversal. Unusual bottom. It was basically almost a V reversal. So, but yeah, it was a really nice grab. And other than that, yeah, a few other little scalps, like someone in our room had mentioned AEHR. I just scalped that when it was still in the going up mode. Nice. It's a little bit of a scalp. So overall, yeah, good day.
Very nice day. Very volatile there. That's exactly what we want in this market, and hopefully the market stays in 2023 volatile. And I love that. If 2023 stays a flat year, just SPY around 380 trades, but if like this volatile every single day, that would be amazing. Which I think is going to probably be like that. This year is going to be a flat year, but extremely volatile, and that's really good for traders, but really bad for investors. Like everybody, bond traders, bond investors, are really having a horrible time. But day traders, it's just been amazing. Like as you see, TLT, which is the bond market, is going to go up. Look at this huge run up. So bonds were horrible last year. They were like 60%, 70% drop because of the now. So this tells something that the market is really anticipating a slower, interest rate hike. That's why the bond market is moving like this. Perfect. Thank you so much, and have a good day. And yeah, we don't care about investors. No, I'm kind of an investor too. I'm actually down heavily on my positions, but here's the thing, it's the business cycle. You have to understand that the business cycles, and that's the biggest lesson that I learned in 2022, both as a trader, as an investor, and as also an entrepreneur, is that, you have to understand the business cycles. There are some times that rates are zero and prices are stable. Everything that people care is just pushing the economy, and there are some times that the economy cannot handle price stability, and then you have to bring it down to and it's very, very important for for me that was my I'm a still very relatively young trader and investor, so that was the biggest lesson that I got. Business cycle, you have to bring down the economy. Not everyone can be rich. If you make everyone rich, what happens? They start flipping JPEGs, they go buy property in metaverse, and they just buy NFTs of things and stuff, and that type of thing. So you have to cool down the economy, so you get the price stability. Because 2 things are important: price stability, maximum employment. Right now we are on maximum employment and we don't have the price stability. And not only is inflation, but also inflation expectation, anchored inflation expectation. If becomes the norm that, you have to increase the prices 10%, 20% every year, that's just normal. Like Argentina, I was just in Argentina a few weeks ago. They have this anchored inflation expectation that, the prices by default goes up 20% every month. Like, why? There is no real reason. It's just a psychologically. So that's why the Feds were really aggressive, because what they were afraid was that inflation becomes just normal. People anchored are 10% normal every month, everything goes up. That's why they're really, really aggressive, and it's painful for some households and businesses, as they say. But when you look at the macro economy, the prices are, when they're stable, is serving everybody. It's definitely, I lost a lot of money. I'm sure everybody in this community, their 401ks are horrible, but overall, when you look at the macro economy, it's better to have this drop and stable prices in the long term. All right, guys, thank you so much. And so have a good weekend. See you next week. We start the boot camp next week. We had a really good number of the people. We'll also have the presentations coming, and I'll see how it goes, guys. Thank you so much.